On January 1st, 2014, a new health care law went into effect in the United States, the Patient Protection Affordable Care Act. This new law requires that almost everyone in the United States purchase health insurance or pay a significant tax penalty, and those penalties are pretty steep. The law specifies that the Internal Revenue Service can only collect that fine by withholding part of a tax refund or all of your tax refund. That's the only thing they can do. They can't criminally prosecute you. They can't take your house. Can't do anything like that. The basic idea behind the new health care law was to make health insurance more affordable, and this is accomplished through a couple of different subsidies. How does this work? It's based on the federal poverty level. The federal poverty level is this formula that was adopted many decades ago. It's now obsolete, as a matter of fact, to define who is officially poor in the United States. It depends on your income and your household composition, and it's different for everybody. What would the federal poverty level be for you? As I said, it's different for everybody, but know this about the federal poverty level: you could make twice as much money as that formula specifies and still be in pretty bad shape. There are two basic ways that the government seeks to make health insurance affordable. The premium tax credit. That's money that the government pays to your insurance company to lower your premium, which is the monthly payment that you make to your company for your coverage. And the second vehicle is the cost-sharing allowance. Premium tax credit applies to people or households who earn or make between 100 and 400% of the federal poverty level. If your income is at that level, you will qualify for the premium tax credit, and the amount depends on where you are between that 100 and 400%. As I said, this is a payment that the federal government makes to your insurance company, and it covers part, and in a lot of cases it may even cover most of your monthly insurance premium, and that's what lowers the cost of your insurance. For people who make between 100 and 250% of the federal poverty level, there is also cost sharing. With health insurance, you have co-payments and deductibles. Those are the amounts that you are normally responsible for. The insurance company pays a lot of it, and then you're responsible for the rest, and those are the co-payments and deductibles. If your income is between 100 and 250% of the federal poverty level, you'll also be eligible for this cost sharing, and that is money that the government pays your insurance company to lower the cost of your deductibles and co-payments, so that instead of say a $75 deductible or co-pay, you'd pay 50 or 40 or whatever the allowance happens to be for you. To get these benefits, you do have to file a federal tax return. No matter what your tax status is, it is necessary to file a federal income tax form in order to get these benefits. Now, how successful has the Affordable Care Act been? That's a matter of opinion. The premiums and the deductibles and copays are a lot lower than they would be without those subsidies, but in the last couple of years those rates have been rising. So the Affordable Care Act has resulted in a lot of new insured people, but the problem that a lot of people have is that they can't actually afford to use the insurance because the deductibles and copays, the amount you are responsible for, are high, and they're getting higher. Meanwhile, the premium tax credits and the cost sharing subsidies aren't going up. They're staying about the same. So medical providers aren't allowed to waive these fees. They can't just say, we'll take what the insurance company pays and then you're not responsible for anything. They are required to hold you responsible for those deductibles and copays. So the fact that those amounts have been rising has caused a significant problem for a lot of people who have gotten insurance under the Affordable Care Act. How do you sign up for Obamacare or insurance under the Affordable Care Act? I will say that you will have the opportunity to know what you'll be paying and what you'll be getting into before you do it. The best way is to go to healthcare.gov and fill out the online application that way. Now, I will say there are organizations that have received a lot of grant money to help people sign up for insurance under the Affordable Care Act, and in that situation you actually go in and talk to these people, and they will help you sign up and choose a plan. A lot of the organizations that got the grant money to do this are supposedly non-profits, but let me tell you this about those organizations: they want your money, they want your business. A lot of them do. Non-profits aren't supposed to operate like businesses. They're supposed to be a different setup than a business that's out for profit. And yet, a lot of these non-profits actively campaign for your business. They want your insurance company's money and they want your money. I've seen situations where one organization that was helping people to enroll would move into the area or the turf of another organization, and the first organization would get all mad about it and say, we're supposed to be the do-gooders in this area, not those other folks. So whatever their motives actually are, I will tell you that organizations that are involved in helping people sign up for the Affordable Care Act, they definitely want your money. So the thing that I would suggest would be to, if you want to find out what your health insurance situation could be or how much you'd be paying, or actually want to try to get a plan, the best thing to do is to go to healthcare.gov and actually fill out that application for yourself. What do I really think about the Affordable Care Act? I think it was a good idea, but I think it was very badly designed. A lot of people got left out of it. The original law stated that states would be required to expand their Medicaid programs so that people at 138% of the federal poverty level or below would automatically be signed up for Medicaid. But a lot of states didn't want to do that, so they filed a lawsuit in the U.S. Supreme Court. The case of National Federation of Independent Business versus Sebelius, who was the Secretary of Health and Human Services at that time. So she was the defendant in that case. And what the Supreme Court said was that the federal government could not require states to expand their Medicaid programs. So in spite of the fact that the government was paying for this Medicaid expansion, a lot of states throughout the South and throughout the Upper Great Plains refused the Medicaid expansion. So what this meant was that a lot of people who should have benefited from this law are perpetually locked out of it. They can't be eligible. They can't get in. They can't get Affordable Care Act insurance. And their options are the same as they were before. They're very limited. So I think the Affordable Care Act was half a loaf. It did help some people, but it wasn't the cure-all. And in the United States, we're going to have a lot of problems with health insurance in the future if this law doesn't get modified or changed. Is that going to happen? Not very likely, because Washington is in a state of gridlock where different parties control the different branches, and of course one party, the Republican Party, it wasn't for this thing to start with. And because of that Supreme Court ruling, they're not going to be able to do a lot to change it. So those are the basics about how it works, and that's my basic opinion of it and advice as to what to do if you want to get into this thing. So if you want to check out the Affordable Care Act, go to www.healthcare.gov and you can input your information and see how it'll affect you. And that's the basic information concerning the Patient Protection and Affordable Care Act. 2010.